Let's talk about the future of money. I will save a long introduction because you all know why you're here. But obviously, you can just Google cashless society and know that there are plenty of people that aren't just in the industry that are thinking about this and wondering about this and want to know about this. So let's discuss it. We have a great panel of experts to talk about it, starting on my right with Eric Dunn, Senior Vice President of Commerce Network Solutions at Intuit. Paul Galant is CEO of Citi Enterprise Payments. And to my left, I have Mark Lavelle, Senior Vice President, Strategy and Business Development of PayPal, and Ed McLaughlin, who is Chief Emerging Payments Officer at MasterCard. So, gentlemen, let's start with Bitcoin. No, I'm just kidding.
Start with it.
We will get to that because I have to. Every lay person I've talked to has said, you're going to talk about Bitcoin, right? I said, yes. Sure. But first, let's talk about the payment system and this idea that we would all be using our smartphones as our wallets and that this would be replacing our credit cards, our cash, other things we're all using. And talking to each of you ahead of this, several of you, most of you, seem to think that we would be here already. The technology is here, but it hasn't happened as quickly as you all thought. Why is that? And whoever wants to start can start.
I'll start.
You start.
So I was one of the people who probably made rash predictions 3 years ago that, 3 years later, namely today.
Eric, you were making rash predictions 12 years ago.
A lifetime perpetrator of rash predictions. But some of the more recent rash predictions I made, 3 years ago, is that by around now, a lot of consumers would have, their plastic cards kind of embedded in a mobile device like this, and they'd be able to use that for point-of-sale transactions. And obviously, that hasn't happened except in pretty rare, narrow cases. I call that a time frame error, not a directional error. I think it will happen. It just seems implausible to me that in the year 2050, we'll be using plastic cards. It just doesn't make sense, based on kind of all the history and evolution of every other kind of technology that we deal with in our day-to-day life. Also, like many of you in this room, probably, I have teenage children, and they're all about electronic. I mean, paper money, they dispensed with that early. Paper of any form, they dispense with in their lives. And so I think there's just an expectation which leads to a proclivity to use the technology in younger people that stuff will happen electronically. Why hasn't it happened? Who knows? But one reason certainly Apple has been slow to move. And I think they were the one player who could clearly have made a big impact, and they've chosen to be cautious, and maybe rightly so. I think another difficulty is that just kind of the circumstances of the leading technology for using mobile phones to make payments is something called near-field communication with a chip, where a so-called secure element is kind of the scene of a tug-of-war between mobile carriers and card issuers, and they haven't really been able to figure out kind of who owns that, and implicitly owning it has rent or some fees attached to it, and so for that reason I think the market has been slow to develop. So those are the two big reasons I can think of. I'm confident, by the year 2050, wow, that's giving myself a lot of lead time. Really,
indeed.
By the year 2023, in a similar conference, people here with mobile devices will be able to use those mobile devices to make point-of-sale payments.
Yeah. Well, I luckily there's a panel about living to the age of 1,000, and so perhaps within your lifetime. Look, I think there are three things that need to happen for mobile payments to take off. I personally think that we will be making payments using our mobile devices in the same way that we make a call or send a text. I think that will happen. Three things need to happen. One is consumers and merchants need to see a see-spot run simple value proposition, right? It can't be complicated. They don't care about NFC. They don't care about anything other than, hey, this is really better, right, maybe 10x better as an experience than whipping out my card, which, by the way, works pretty well. So there's got to be something compelling. My view, that compelling needs to be that, your shopping list that you have today, that you use in the analog world, is going to be far, far inferior to being able to use that shopping list on your mobile device, because it's getting you, real-time offers, contextual value. It's simple and easy to use. So one, you got to make sure that the consumer sees a benefit and the merchant sees a benefit. And today, merchants look at it and say, wait a second, tap the phone? Maybe, but it costs me more to tap the phone. And candidly, card not present rates and the liability that come along with it is not something that I really want to do. The second thing that you need to happen is the enablers, us in this room, need to have a business model that's sustainable. There is no business model that's sustainable today in enabling this new paradigm. I can envision a time that there will be one, but as of this moment, there's still a lot of friction. And that friction is not a way to create adoption. Third is regulations. And I know this sounds maybe pedantic, but at the end of the day, we're talking about payments. And it's one thing to flash your QR code to get your coffee. That's a relatively low risk dollar amount. You'd probably be willing to try just about anything. If you want to move to a far more ubiquitous everyday use of bill pay and making purchases, the regulatory field has to be confident that your consumer privacy is protected. It's got to be confident that the payment system is secure and sound and is not made vulnerable by these devices. I think that's very important. So those three things have to happen, in my view, for this thing to be mainstream and to get adoption.
I want to hear from you guys down here, and then there's so many things to follow up on. So many things.
Sure. Well, I think a little more optimistically. A lot of times we focus in these discussions way in on what we know,
Right.
which is mobile phone and a card and a token. And the fact of the matter is, we're all payment geeks. I mean, I had a wristwatch in 1999. I was buying my lunch at a major credit card issuer with a sensor in my wristwatch. We thought that was so cool. Why isn't everybody doing it? It's because consumers just weren't there yet. It really wasn't that the technology wasn't there. But that was only 10 plus years ago, and here we are today, where I think we are seeing this happen on a consumer level. I mean, how many of you have been to a record store lately, or picked up a physical newspaper or magazine? There are places that are highly influenced by the internet that happen to have a payment association with it that you don't even think about anymore, because it's embedded, quote, in a device. It's actually, your credential is already known by the person selling something to you. And what's happening today is that influence is spreading to a number of categories. There's categories where 80% of the purchase decision is influenced by what we do with an internet-connected device. Things like furniture and electronics, and increasingly things like apparel, 40% influenced. So when you have the internet involved in a decision, it becomes easier to see where there's going to be a flip, and you'll actually have payment be associated with your expression of intending to buy that. So for a lot of ways, smartphones in 2020 will be 80%, it'll be ubiquitous. We'll all have these things. And it depends on what time frame you're looking at, but Eric's prediction in some form or fashion will come true while he's alive, which will be a first.
No. It will be a first.
Unnecessary roughness.
Well, you said we're going to be controversial. Right?
Yeah, do it. Bring it on. All right, Ed, let's hear from you. And I know you have something in your pocket that kind of illustrates where we really are versus where we theoretically would like to be.
Depends on the pocket. No, all right, I will definitely do that. No, and I want to offer complete concurrence with Eric, as it happens too many times. I really think if we asked everyone in this room, and you came here for a reason, what's a mobile payment? What's a wallet? You realize a lot of what we have is a framing issue. There was some great consumer research, I think it was ComScore, that asked people, and a majority of consumers said, I'm adopting a mobile wallet this year, and an even greater preponderance said, and I have no idea what that means. Right? So we have an enthusiasm for the technology. But I do think it's important we take a step back. I was talking with an editor, and she was saying the biggest problem she has with this space is everyone wants to talk about the surfers, and she's trying to write about the wave. And I really think what's happening and what we're seeing, and we've all said it in our own ways, is just a fundamental transition from being entirely oriented in the physical world to the connectivity to the digital, of which your mobile phone is iconic, because it's the first time you can always be online, and being online is always with you. But think about it in your life. It's just one of the many devices you're using. Think about how you're using your mobile. Probably everyone in this room has bought something using the browser in their mobile phone. So congratulations, you're already doing mobile payments by the way some define it, although I tend not to, right? So if you think about what's happening, is it's about maximizing the capability of the device, whether it's your classic lean forward on your PC, lean back on your sofa with the tablet, the ubiquitous access of everywhere from your mobile phone, which will move to wearables, whether it's watches or glasses or other things like that. So I think what we're talking about is how do we maximize the connectivity that people now have with the capabilities of each and every device that they're using. And I think that's a key element from it. And for a consumer, again, we're looking through the telescope the wrong way. If it's here's how you can make a transaction, they don't care how it works. What we got to say is this is better for you. So if I can tap my watch to get on a bus, it's better for them. We've just opened up Transit for London for contactless payments. First few months, 1 million people have done it. Why? Because I don't want to have an Oyster card. I want to flip it through and get on the bus as fast as possible. That's better. Why will adopt it? Because it's better. If I'm on the bus, I want to order ahead using the browser on my phone. So when I get to where I'm going, my food's already ready for me. And the merchant can now say, hey, I'm like Adele. I make it, I'm paid before I make it. That's great. If when I walk into the big box store and I want to buy the giant piece of something and I know I'm taking the bus home, I can buy it in the aisle, use the exact same cloud, if you will, or remote stored credentials that I'd use if I bought from my desk or work or my tablet on my sofa. That's better. So consumers simply were going to adopt each of the episodic experience that we in an industry do all the hard things to make it better for them. So I say there is no one wallet to rule them all. You never want to take anything away from people, and adoption is solely driven by every one of those consumers saying, to do this thing, I can now do it 10x better. I can now do it what's there. And that's why when I get the question, when will it happen? It's happening. The tense is wrong. You see it all around you. And that's what we need to do as an industry. And to the point that you're asking for, if you think about the iconic card, all this has ever been is just a way of packaging the credentials to get into the network.
Notice that's a Citibank credit card.
It is a Citibank card, by the way.
I just want to make sure that
I do
everyone
think
sees that.
So what are we really doing? I think of it as just generational change in payments. We went from completely offline to using a mag stripe for electronic to then enhancing it with cryptology that we could deliver through a chip. We're now taking the chips off the phone and using the capabilities of the device to make it more secure, to make it easier to use, to enable all of those consumer experiences. But as I said, there's a reason why the card's still embossed. You never take things away from consumers. Literally on the cab ride over, I wanted to use my card and the cabbie gave me a knuckle buster. For me as a consumer, that was great. I got to take the cab. The transaction went through. So I think that's the challenge for all of us, is how do we say for every one of these commerce experiences, it's not about the transaction. It's about how consumers shop, it's about how merchants sell, and it's about how we can make it better. And that'll drive the adoption, but your mobile will be one of the many devices in your life, and what you use it for will be that set of shopping experiences where it's better for you.
A couple things. Before we talk more about the wave, let's talk about the surfers for a minute, because we do have the opportunity to have some card issuers.
It's always funny when they wipe out.
And someone mentioned the turf battle between
Yep.
the card issuers and the cell phone carriers. So where are we with kind of divvying up the piece of the pie? And is this going to be a major issue with moving forward?
This is all around who owns the customer. And
Who owns us?
exactly.
Customers.
Who owns the customer?
You're not owned.
Right, and so I think that the fact is that I kind of liken it to the entire infrastructure on which we build the cards system. You apply for a card, I send it to you in the mail, you call me, I activate the card for you, and now you walk around with it and you safekeep it. So on a mobile device, like everything else that follows the digital world, we want to be able to send you the card and have it be directly going into your mobile wallet and have it be safe and secured. So that's kind of what we're after. It shouldn't be more friction, it should be less friction. And the issue that I think we have with the wireless carriers today is that they expect that if we're going to use this channel to take credit card information and beam into your phone, that in fact should cost us more than what we currently do using the mail system. And it ought to come with different sets of contracts and rules. That's not sustainable. That is not a way to gain adoption. That short-term friction is a way to hurt adoption. So, for us, it's very simple. the technology that we're going to use is the one that is safe and sound and is the most efficient. Now, if the most efficient, safe and sound system is what the carriers offer, great, we'll use it. As of today, it really isn't. It's a very complex integration to take your credit card and put it into your mobile device. It is a very expensive proposition to have that card live in a secure element. And candidly, it's built on architecture that's 50 years old. Why in God's name should you save a live credit card number to a device or to put it in a merchant's warehouse, their digital warehouse? Why would you do that? Why wouldn't you move to a dynamic token that lives for a nanosecond at the time that it's needed, right? In which case you don't need these very complex integrations. You don't need this architecture of TSM and secure elements. And so I think we're going to really do more than just incremental innovation. I think if we want to capture the hearts and minds of consumers and merchants and create a really industrial strength, scalable payment system that uses offers and loyalty and mobility, I think we have to start at the very basics, which is why are we building it on top of 50-year-old architecture? This is the chance we can sort of reboot that.
I think that's right. We've been doing payments at PayPal for 15 years. We've done about $145 billion. We have the unique experience of people storing multiple payment credentials behind an identity that they authorize on the web, increasingly on devices. We'll do $20 billion of mobile payments, people going to e-commerce websites or mobile commerce websites, buying with that credential. And increasingly on Xbox, they're using that credential to buy games. And they're doing it because there's a trust element to it, to that credential. It allows the flexibility for them to use what they have in their wallet, whether it's a Citibank MasterCard or a Chase or one of their debit cards or a gift card that their grandmother gave them last year or a coupon they got to activate. That's an improvement in consumers' lives. That's making something easier. I can manage all these things that companies are bringing to me, whether it be loyalty or value exchange or my paycheck or how I deal with my banks. I can use that in the world in a way that's easy, simple, and safe, and I can use it everywhere I want to use it. That's where we're heading.
Eric, you look like you were dying to say something.
One point I wanted to make was that I think it's not clear who's winning, but I think the carriers are clearly losing. And
Okay.
I think the carriers are just one player too many in mobile payments to make it possible to square the circle and deliver a workable solution. 10 years ago, if you looked at mobile banking on a phone pre-smartphone, carriers thought that they had a play and that banks should pay them for the right to work with their customers on a mobile device. Mm-hmm. And a number of startups actually built their whole business around that model. And it was very, very complicated, and it reduced adoption. That went away with the iPhone and Android, and mobile banking adoption has accelerated dramatically, both for that reason and also because of the capabilities of the phone. Right. I think the same thing will happen with carriers. I think NFC is NFC will win because if it wins, it will win because the carriers cede control. If they insist on being part of the equation, it's just too complicated. So I hope they back down because I think it's a useful, if not an ideal, it's a useful technology.
So when the carriers cede control, then we will all be using.
And they're close. I would say.
It's moved very
close.
fast, right? I mean, who would have thought?
Yeah.
Samsung. I just actually changed to my Galaxy 4 from iPhone all these because Samsung's selling more phones than Apple. That was not the case 18 months ago,
right,
where we thought Apple could drive a standard. Now Apple's back on their heels. And we thought, Google bought Motorola. What's going to happen there? It's very clear what we're dealing with is a fractured operating system and fractured brands that are going to be putting these devices in hands of consumers. In a way, it doesn't lend itself to payment standardization because at the end of the day, merchants need one way to accept all payments, and consumers need to know, how to do it. And so I think it will lend itself ultimately to the not putting your credit card credential expensively in a mobile device. It will probably lend itself to probably more cloud-based credentials that are ubiquitous across point-of-sale channels and digital channels, and that lends itself to carriers having to look for other ways to create value around their ecosystem and
And-
trying to make payment standards.
And when you're talking about the cloud and you're talking about all of our information being somewhere that people can't see, the issue of security comes up. And this is the #1 issue for consumers,
Yes.
according to the graphic that we have. If you could bring up 9 just to show what people are concerned about, safety, security, and theft, loss of phone is the #1 concern with a digital wallet, followed by no concern, which I thought was funny. But what are the current issues with security? Is the security in place for more of a move towards digital payments?
Well,
Let's start with you.
2 thoughts on that one, and I want to honor Mark's point that he just made.
Sure.
I think looking at this as a zero-sum game, when you have massively scaled, highly efficient systems, of global reach that have been honed over the years to do that, I think what is being learned or perhaps understood in the industry is these systems work really well and really efficiently, and the question is how do you take advantage of them? It's not a zero-sum game. What we need to focus on is how do you generate new values around this. I think that's how all can benefit, and I think that's a realization, I think, that's coming through the industry. What I love about the safety and security, though, is we do need to recognize that anything that is done will be an attack vector. We live it all the time. We compete vigorously. We also cooperate to make sure that the integrity of the system is there, and we have to make sure the right standards are in place. And what I love most, I think, about this transition to digital, mobile, and all the other intelligent connected devices, is as an industry, we've always had a dilemma, right? Anything you tend to do to make it easier to use, you're at risk of introducing a fraud vector. Anything you do to lock it down, it's less convenient for consumers, merchant lose sales. And how do you manage that? Now that we have a state change in the platform, we have the opportunity to both make the transactions far easier to use, to deliver those new shopping experiences, and to make it more secure. And I think that's what's missed. What all of us, a PayPal, a Citi, MasterCard, have tended to do is stay at that kind of connected software level, almost ignoring, not embracing the device that's being used. So that's why whether it's a hard, secure element, which is a chip in the device, or whether it's the device binding with trusted execution zones, like we're working with Intel and Qualcomm and others, I think the promise we need to make to our consumers is as you move from one environment, a well-known plastic environment, into a digital environment, we're taking advantage of it by actually and actively making it more secure for them. It's not a question of what compromises do I have to make for the new experiences, but what benefits can I get along with it.
And I would say that, look, I think this is the best time to be in the payments business. And I've been in the payments business for a long time. I have never seen more opportunity and more real ability to create value that we didn't have before. I have yet to meet a company that wants to be a bank in this space. A lot of companies are very excited to create wonderful communications level software. Some want to create very good onboarding experiences for consumers and merchants. But look, at the end of the day, we're talking about moving and storing and lending money. And at the end of the day, things go wrong every day in these systems, right? I mean, when you do $3 trillion of flow a day, which is what Citi does, things go wrong every day. And you know what my clients want to know? Who's going to make me whole when things go wrong? And that question, who is going to make you whole, is, at the end of the day, the most important thing to gaining trust. Because when you have a problem, you can't, or you're not going to want to go online and type in a note. You're going to want to pick up the phone. You're going to want to talk to somebody who is empowered to make you whole. And so when we talk about the safety and soundness of the payment system, the concern that people have, we can get very technical quickly, but it's really a simple issue, right? Behind the scenes, we can hedge our own risk as providers. But for the consumer, they just want to know. And for the merchant, they want to know that they're going to be made whole. And I think that's the key to it.
Well, so do banks have an advantage over tech companies and startups and potential disruptors that could really also innovate?
Let me answer that.
Yeah.
I think this question of consumers feeling confident that they'll be made whole is actually, very important. And actually, one of the reasons I think payments work so well, and for most people they do work well, is that consumers believe that if something goes wrong, their bank or their issuer will make them whole. And that largely is what happened. I mean, there was some government regulation that spurred that, but I think banks go over and above actually what's required by law. So the card-based scheme, has costs to it, but the benefit it has is that if you're doing a card-based transaction, I think consumers have a very high level of confidence that they're not going to get screwed. And that question, worrying about security, I think for a lot of consumers is a hypothetical question. It's, if I
Exactly
invest in Bitcoin, not if I put my American Express card on my in my mobile phone with the Amex Serve application. If they're dealing with kind of the financial instruments that they've had in the physical world, I think the confidence carries forward, just as it carried forward into e-commerce transaction on the web 10, 15 years ago.
I don't think you find anybody taking the contrary side of the safety and soundness argument of the payment system. But if it's used as a way not to allow innovation, which I would contend that it has been in our industry for the past 50 years.
Wait, what has been?
Lack of innovation. You own the franchise. You own the governance of that franchise. Therefore, you dictate what happens. I mean, Ed's experience in the back of the cab was not a good experience for the cabbie or Ed. It was actually a lack of innovation from our industry that took a 50-year technology and made money on it and decided there's really no need to change it. And if the excuse of, well, only we can answer phones and handle customers' complaints is used to thwart the types of customer experiences that we all agree want to happen, then I think as an industry we're not doing our constituents, merchants and consumers, any favors. And by the way, it won't even matter what we think. I think it'll happen because, like it always happens, consumers adopt it. And then the industry will fall in line with whatever consumers are looking to do, as will retailers.
So are you saying you think banks are kind of in the way?
I think we've been in the way. Look, I've been in the industry myself. We've all been in the industry. We know that we've tended to compete around a commodity product for a very long time, fighting for share, charging fees that made little sense to consumers and to merchants, and not feeling like we needed to change anything because we're regulated and we have a large capital. All that being true. But I think what the internet has done and what technology has done now has put in the hands of consumers a power that's not just changing payments and banking, it's changing everything.
Right.
It's changing every single industry that you look. Look what happened in the music industry. Look what's going to happen to education. We can't think that we can hold that back from banking and payments. And I think what we're seeing now is we're not.
Paul, do you disagree?
I take the other side of that. Look,
Really?
We're launching 4 global platforms this year in mobile payments. We are about as committed to being the world's global digital bank as you can get. We love innovation. We love when partners innovate. And hey, we launched the Google Wallet with Google. So we're very much aligned to innovation. The problem is that if you build innovation on a rickety foundation and you sort of use workarounds to enable payments to happen, that's not good for anybody. It's not scalable, it's not sustainable. And for high volume regularized usage, which is how the credit card and debit card business work today, which is I've got to make sure that that thing works 3 trillion times in the same way, you can't be cute about it. You can't you can't build Mickey Mouse systems. You have to build industrial scale software and the back-end infrastructure to support it. And so, I'm all for innovation. I want to see more innovation in payments, but I want it to be able to stand the test of stress. And the stress is the everyday flows that we put through it. So,
I think we can all agree with that.
Yeah.
I think that's what needs
Can
to
I ask you a
happen.
question about the rickety 50-year-old infrastructure? So, if you think about what happens in a store, anybody here have a smartphone? Probably. Anybody here have a mobile banking application on the smartphone?
Yes.
A lot of you? Yeah, lots of people. So, in many cases, the consumer is walking to the store with his or her Citibank app, and so they're connected. So their bank is essentially on their mobile phone, and that retailer, if they have a tablet they could be connected to their bank equally. So you're awfully close to being able to complete a transaction between the DDA account of the customer and the DDA account of the merchant with smart connected technology separated by a few centimeters at the point of sale. So were you making a call to kind of ditch the card networks because you're so close to being able to complete that transaction with both parties right there?
I love.
I'm trying to be controversial here.
Do it, yeah.
No, I love the card networks. They're great.
So why do you need? So explain to this audience that why do you need the card network when you have a real-time access to the buying account and the selling account within a few centimeters on smart devices that have 6 ways to communicate?
Yeah, because ubiquity trumps everything else in my view. So what the card networks have done brilliantly is they've connected all issuers and all merchants together so that if I'm a Citibank customer, it doesn't matter, I can go anywhere and use my MasterCard.
But the internet connects everyone together too.
It does, but the internet is wonderfully suited for low-risk activity, and I could do it all day long, some data, some voice, maybe, but for payments is a very different animal, and the fact is somebody has to take the other side of that trade and has to make sure that no matter what happens, the money goes from point A to point B, and if it's intercepted, that neither the consumer or the merchant is harmed. So I think that there is a level of security and ability to authenticate that's critical. But I want to come back to your point. What do I think is wrong with the system? Look, today when we give you a credit card, when we issue a credit card to you, 25 years ago when we did that, really you used that card at the point of sale, right? You kept it safe in your wallet and you swiped it. And that was the arrangement we had. The internet came around and you started to store your credit card on websites, and then you started to put your credit card in bill pay, and now you want to put your credit card in 50 billion connected devices. Your car's going to make a payment, your refrigerator's going to make a payment, your phone's going to make a payment. It's going to be great. Unfortunately, on the back end of that is a service organization. And when one of your cards gets lost, or if your live number gets compromised, we have to reissue all that. And there's got to be this process of you updating all those cards. And if we go to an architecture that says secure elements, everything's going to be in a secure element, I don't have the keys to a secure element as a bank. You don't have the keys to a secure element as a consumer. It's sitting with a carrier, by and large. Right? So we're creating a life cycle management issue that is absolutely difficult to solve. We're increasing the fixed cost base to operate this platform. It's sort of the exact opposite of what you would expect in the digital world. So my view...
Well, I wasn't arguing for the secure element NFC approach. I was saying you have smart connected devices with real-time access to source of funds and destination of funds right there close together at retail. If you were inventing a system from scratch to solve that 2-centimeter problem, is this the system you'd have, and would it cost 2%?
If I can use a dynamic token instead of a live 16-digit credit card number to affect that, I'm all for it.
Yeah,
and that's a big difference between...
If consumers lived on one card, that would be it. But consumers use 4.5 cards actively. They probably have 7 more. They have private label store cards. They have stored value cards. They have debit cards. They have checkbooks. And so if you look at from a consumer standpoint, the technology is there to help better their lives and improve their access to those devices safely and securely without a single token or a secure element or some of the other things that are going to cause friction in their lives. And by the way, if the internet's not only safe for low-risk transactions, I need to go close my Merrill Lynch, E-Trade, Charles Schwab, and Citibank accounts.
By the way, I'm really enjoying having PayPal defending the card networks. This is great.
Well, but Eric,
the card networks. The card networks have done and will continue to have tremendous value.
Absolutely.
It's not going to go away.
I want to get back to Eric's point because we may have done this exercise together. 2 things. Consumers, as I said, and I want to get back to my earlier thesis, they want things that bring it together. They don't want to fragment their life across 17 different WSDOLs. Every merchant has seen this. Every one of these highly fragmented things, it's just not worth it to them. I'd love using EasyPass, which is the toll transponder that they have in the Northeast, because I can blow through the toll at 55 miles an hour and it all goes back to my Citibank account. That's a great experience for me. So I see us as providing a platform. The whole design is to unleash all the innovations on the edge experiences that can be supported there, up to including a lot of the work that PayPal had done in the past. If you think of everything that happened in e-commerce, it was based on electronic transactions. It was based on safely and securely giving consumers that new channel as access back to the accounts that they've already have. And I firmly believe the fiduciary responsibilities of financial institutions, they're created for a reason. If you're holding money, lending money, moving money, that is a specific role in the industry which needs to be honored and will be there. I think what we're doing as a network, let me finish, what we're doing as the network, every time I sit down with someone and say, okay, you got these two devices 2 millimeters apart, what do you need? You end up redescribing the art and discipline of running a payment network.
Yep.
Right? I had a great conversation years ago with a telco, and they were saying, hey, you just move packets, here's the volume that runs through our network. First question was, okay, well, how do you handle a dispute? And the answer is, well, what's that? Right? Merchant said it happened, consumer said it didn't. Those are the things that have to be there. So again, I think we all benefit consumers through this transition by being more of who we are. And I really think when you think about what it takes to get those devices together, the consumer's going to say, how many places can I use it? Consumer's going to say, what happens if it goes wrong? Can I use the existing accounts that I have with it? Is this the only place in the world I can use it? Because if so, I will use it once and then never ever use it again, right? And we see and we know that. People don't change even though the context changes. So the other example I just give on mobile payments, this is live from New York, right? I was in the back of a taxi using a Samsung. It was a Galaxy 3, not the 4, but I hadn't upgraded yet. And I didn't even realize I'd done it. I was using my browser. I went to runningshoes.com, one of our MasterPass merchants. One touch, bought stuff. It was great. I went to get out of the cab. I didn't even know where my plastic was. I was able to tap the phone in the cab and step out of the cab because all you want to do is get out of the cab. When I went to the restaurant, because they hadn't adopted whatever technology would be better for them, I used my existing plastic. Because it was a nice restaurant, I got an alert thrown back to my very phone, leveraging the communication to saying, hey, you had a big bill there. For me as a consumer, we're now optimizing my experiences while all bringing it back together and all knowing I get all the benefit of a genuine MasterCard transaction for that. And that's how I see it play out. So you can have two devices 2 millimeters from each other. It's everything that's in between. That's the key.
Maybe we just need a better protocol than NFC, or a different protocol than NFC to accomplish that 2 centimeter transaction.
Well, and that's what I'm saying. Yeah. Look, your device is going to have a wire, it'll have a browser, it'll have a camera.
Yeah.
We've already seen a huge shift, just as you said, of commerce away, e-commerce, traditional e-commerce away from PCs to connected devices. Again, it gets back to what is the experience trying to deliver to the consumer and what's the best one for that context. And there will not be one. There's not one experience, there's not one wallet that rules it all. And you all know that as consumers.
There's not one wallet that rules it all. I do want to get to Bitcoin because I want to ask your thoughts on this idea of a digital currency or a cryptocurrency and if it has any kind of staying power or future, whether it's this one or another one.
I want Eric's prediction on this first.
I think you're selling all my PayPal stock and buying Bitcoin, right?
Well, that's fine.
That doesn't get you out of answering it.
I think it is an anomaly and a flash in the pan. That's my prediction.
Well, you know, one of the things, if you go back to an earlier generation, like first wave internet, there was a lot of currencies that were proposed for that. In fact, if I remember correctly, the guy who was running e-gold went to jail on a felony conviction. So again, if you're holding money, moving money, lending money, there's a lot of requirements around that. Those don't go away. So I think you'll see a lot of these things. It reminds me of one of my favorite jokes. This is 12-year-old material. Do you remember beans? Do you remember flues, first wave internet, which were fungible rewards currency, and they were both failing? So their idea was they're going to merge to create the ultimate rewards currency, booze, you know, beans and flues. You know, so what I'm just saying is every time there's a technology change, there's a lot of implications from that. And I think what it comes back to is what really, really works well, and you got to concentrate on what's the new value that can be created. I don't think we necessarily need or would be desirous to have another currency. I think it's a better way for consumers to use the currencies that are there.
And membership rewards, Citi thank you points, United Air Miles. This isn't a new concept. So from a Bitcoin perspective, you know, we're fascinated by the technology. I think the technology is something, you know, very interesting the way it's set up. If it becomes a transaction mechanism that consumers want to use and merchants want to accept, you know, we look at all these because our job in the world is to make these things easier and safer for customers to use them because they use multiple ways to store and trade value in their lives. And what PayPal does is put a safe secure identity around that lets them use that ubiquitously. And that's our take. So we think, I personally think it has unleashed something that will continue to grow. You can't put technology back in the bottle, and the cost of transferring currencies across the world is pretty high. And so there's a lot of reasons why this type of thing might be attractive to consumers and businesses.
I do think, with the Bitcoin side, though, I do think quite often there is something which is missed, and I think it'd be a great thing for us to talk about, is we always say this isn't about a zero-sum game on what's already been solved for well. Let's get back to the opportunity. Right? The fact is, what I find inspiring, that for all we've done, only about 15% of the transactions in the world are electronic. Right? For all we've done, 1.9 billion MasterCard cards that are out there. There's billions of people we haven't been able to reach yet. So when I think about the potential for this technology and the implications of it, to say, how do you take something that works really well and doing it in a slightly different way is dwarfed by saying, how can we reach merchants through a Here or a Go payments or everything Citi's doing in small businesses that haven't had the benefit of electronic payments yet. If you say every device is a commerce device, it's to make and receive payments. If we say there's huge swaths of populations that haven't had access to formalized financial services the benefit of electronic payments, this connectivity can now give us. If we say that there's huge sectors that are still heavily cash-based and poorly served, and how can we bring the benefit to that? So one of the things which I think is really funny is saying, how do you turn something that works well into something else? Would seem to miss the opportunity of what are all the things that are just lousy that we can collectively make better.
There's a lot that's lousy and a wonderful opportunity. You know, if you're Microsoft and you have Xbox and Xbox Live starts to take off, and you're a kid in New York, you can usually ask mom and dad for a credit card or a debit card, and you enter it in and magically you're playing Xbox Live. If you're a kid in Bangalore and you ask mom and dad for a credit card, they don't have one, chances are. Does that kid not get to play? It's not right. How do you enable a person who is not currently, you know, in the financial system, the way we think of it, to have all the access and all the rights and all the benefits? And you know, this is where I think the convergence of the digital economy, of things like offers and advertising. And the advertising and offers business is a horrible business today in terms of efficiency. I'm sorry, but you know, most of the money that people spend on it is wasted. It doesn't really achieve what it was meant to do. So if you could take the always-on device that has an understanding of who the user is, if you can take that and authenticate that user I'm going to use my terms, in a bank-grade way, meaning that I'm very happy to transact, and you're able to deliver real-time contextual offers and value that make a buying decision better, create more value. I think that's the magic that we are looking for. I think that's the magic that will be achieved, and I don't think it's going to take that long. I think this is coming. But, you know, the way in which we're going to create money is really in three ways, or net new value. One is we're going to move from the physical currency, and there are 85% of the world's number of transactions are done in cash. Right? I mean, that's ridiculous. For each 1% move from cash to digital, $30 billion of value is created. And there are lots of statistics along that line. You know, the second thing is that you're now going to open up many more consumers that today don't have access. Right? Their sphere of commerce is within their local walking distance, or they can take the bus. That's it. Now, if you open that up to the world, that's a net benefit for them, in my view. They get more transparency, more choice, more buying power. That's valuable. You know, and you know, lastly, I think consumer empowerment. My goodness, you know, the fact is that I watch consumers that have interacted with Google or have interacted with any of the wonderful Facebook, any of these companies. You take that experience and then you move it to what typically banks can do. It's woefully inadequate. Consumers are now empowered and they want much more from their service provider. So look, I think, as I said, this is the best time in the world to be in the payments business. More is going to be created in the next 10 years than have been created in the last 50 years. I'm confident. And I do think that it's going to be a leapfrog. I think it's going to be that much better in terms of an experience of what we're able to have today.
Before we open it up to questions, I want to touch on two things. The future of cash, because there still is a large demand for it. Okay, people need it to pay those cabs that won't accept credit cards at all. They need it in case their cell phone that they're using to pay for things is dead, as mine often is. They need it if they don't want to be traced. They need it if they are a merchant and they don't want to pay the fees of accepting other forms of payment. So, I mean, we're not moving away from cash anytime soon, are we?
I have a friend, Danny Shader, who runs a company called Pay Near Me, which is all about allowing people to pay with cash for digital goods. So, for example, if you're a teenager and you don't have a card and you want to buy something on a website, if they support Pay Near Me, you can order something on the web. It's a little clumsy. Take a receipt on your smartphone to a 7-Eleven, pay in cash at the register, and then the shipment proceeds. And what's interesting, talking to Danny, and of course, he's a booster of the cash economy. That's what his business is about. But he'll open your eyes to the large number of reasons people choose to pay for cash. Now, some is that they're too young to have a card-based payment instrument. Some is habit. Some is privacy and confidentiality. And some, he doesn't really mention, probably refers to kind of illicit sources of the funds. But there is a large cash economy, and it's not just the illegal immigrants and children who seem to care about cash transactions. Even in the U.S., a very advanced economy.
Right.
It's alive and well because of those things, though, and I think that's a cautionary tale for our industry.
Yeah.
If we don't reduce the cost of access and inclusion for all types of sellers and buyers across the world, if governments overregulate payment networks and banks, and if taxation, quite frankly, continues to be viewed by the population as something that they want to avoid, cash has a long life left in it. But I think we can proactively help by doing some of the more fundamental innovations on user experience, using the internet, using devices to include more people and lower the cost, make it safer, make it more ubiquitous.
Yeah, we absolutely see that. And the one thing you asked about Bitcoin, I always say can you imagine if you tried to introduce cash today as a payment instrument? I mean, can you imagine making that pitch if it didn't exist? I was saying to Eric, like with your kids, it's like explaining a stamp to them. If you never used it, it's just a bafflement of why you would ever have cash. Right? It's this legacy instrument, which I think gets back to my earlier point, is consumers never want to lose anything. They only look for what's next. So I think what's going to drive a lot of this is a couple things. It's the transformation of retailing. Right? As the retail floor of the future looks more like the cashless cabin in your Fearless airline, right? You're not guarding the till, you can be out merchandising. As the access gets easier, if you look at, we've had millions of merchants joining the MasterCard network in the last few years simply because they could now use mobile devices as a point of interaction. They could get access to the electronic payments industry. So driving the barriers down, recreating what the shopping experience is, moving more from the physical to the digital world, consumers will choose away from it simply because it's better. And that's why low-value interfaces, tap and go, all of those things are so important because they will only move when you provide them that better option.
So are companies like Square going to do very well?
Listen, I think Square is a brilliant company. I think they've done just a terrific job of innovating. I think they provide a valuable service. I don't think they're scalable, and I don't think that in of itself that's sort of the be-in and end-all of payments. It serves a good purpose, and to that end, I think it's terrific. To the extent that they don't compromise the safety and soundness of the payment system, I think that's great. To the extent that consumers and merchants are protected vis-a-vis their privacy of their data, I think it's wonderful, right? So there's a checklist that you can go through, but most real companies that are in this space, like a PayPal, like a Square, I think that they go through a pretty comprehensive approach to making sure that things work as they should. The question is, does it scale?
Does
right?
it?
I have doubts. Because I know how hard it is to scale a payment system. I think that going it alone for any one of these companies is a really bad mistake. I think you have to understand what it is that you are really good at doing right? If your business model is monetizing advertising, if you're Google, and that's what you want to do, stay out of the payment system. That's a very different business with all sorts of complexity. You don't need to be a PayPal in order to do that type of work. You can get the benefit of someone doing payments as a full-time business, and you can use your advertising vision and your approach and marry those two in a very constructive way. So I think it's important to specialize in what you do.
Before we open up to questions, just like maybe show of hands, do you think we'll ever have a cashless society?
Raise
Yes?
your hand if you agree.
Raise your hand if you think yes.
Yeah.
Really? Wow. Okay. I guess maybe just one more before questions. What about the future of completely alternative payment systems like PayPal? If you look at slide number 10, everyone knows what PayPal is. They don't know about a lot of other forms of the digital wallet. Mm-hmm. There you see.
Would you like me to comment on that?
Yeah. All of you.
Well, I think it's described as an alternative payment system. We do fundamentally is different from what everybody else on the stage does for consumers and merchants. From an eBay Inc. perspective, we help connect buyers and sellers using our technology and using the power of the internet and connected devices. From a PayPal perspective, we help the things that consumers choose to have in their wallets work better, and we help them connect with buyers, whether they're in China or Australia or Bangalore. So that value proposition, we think, has a lot of legs in terms of the types of things consumers are asking us to do when they take connected devices into their lives and want to access their wallet to trade value. So yeah, I mean, what that shows is brand is an important part of this, because brand connotes trust and awareness and the ability to have customer service and the ability to make this stuff work and deal with disputes and chargebacks. I think that is all table stakes for the new economy.
But if we think about this as a race between alternative payment systems like PayPal, card-based and bank-based, which is going to win?
It's not.
I don't
not
think it's
It's not a race.
I don't think
Everyone
it's
can win.
it may very well be a race. I just don't think it's a contest, in the sense that I think that people are racing to innovate and create these wonderful experiences. But once defined, the system will revert to what is the most efficient way of delivering it. And then it doesn't really matter who invented it, actually. It depends. The thing that I think matters the most is who scaled it. And I think it's going to take all of us to scale these things.
Eric's itching to say something.
Yeah, if I had to mention a dark horse candidate in the race, which I guess you'd probably call either a bank-based or a alternative payment platform, it's Fiserv's Pop Money P2P payment system. And what's interesting about this is, unlike many other P2P systems, it's deeply embedded with financial institutions. I mean, it's marketed by financial institutions. Fiserv is a technology provider, online banking, mobile banking provider to many mid-sized and small banks. And Pop Money has a way to move money real-time from bank to bank, independent from the debit network, independent from the ACH, independent from the wire network, because Fiserv kind of powers the systems of record for these banks. So right now it's performing fairly limited use cases, send allowance money to your kids, for example. But you could easily imagine, as banking migrates from the web, online banking migrates to mobile devices, which it largely is already doing, that a consumer could have Pop Money in his or her pocket in the banking application. And if the merchant has the same application, then you come close to a different way to bridge that last 2 centimeters that we were talking about. So not hard to invest in it as a pure play, because it's part of a giant conglomerate, but that's an interesting innovation in payments.
We have 5 minutes to take some questions. Gentleman in the front.
I'm a bit heartbroken. It sounds to me like you guys still have a very long period. It looks like you still have a very long period of time to figure out the American market. I'm setting up a network of 50,000 smart public phones in Mexico to allow banking and electronic payment for low-income people. And we're looking for a strategic partner. It looks to me like you guys have such a long way to go here that I should probably go back home and look for someone else.
Well, you don't have to go far, because Citi and Banamex, which is our Mexican bank, and American Mobile did a deal together a bunch of years ago. We created Transfer, which is exactly, I think, provides that money transfer service for generally the unbanked in Mexico, and it's growing like a weed, and it's wonderful. That actual application is not exactly the application that likely would work in the United States for the types of commerce that we see where there's a demand. So I think that as many different flavors that you've heard today, Citi's a global bank, and we have various degrees of success. We're doing things in Asia that are extraordinary and are really gaining adoption very quickly because the environment is such that it enables us to do that. The merchants are wired, the regulations are available. In the case of Transfer, we did a deal with someone that has a huge percentage of the population as their subscriber base, and we're delivering a very simple, easy service. So I wouldn't get too disheartened. Things are happening. The U.S. is just a somewhat complex environment, primarily because there are so many contenders trying to figure out how to get a piece of the pie.
Yeah, it's a shame we didn't have a chance to talk about it, because that's, I almost say there's an inevitable upgrade which is happening in the lives of the consumers we've tended to serve in the past. And there's a tremendous opportunity to engage in consumers that we haven't reached with electronic payments yet. So with your transfer product in Busa, I can get a MasterCard companion card, which gives me access with that in Mexico to all the banks that are there. We did a joint venture with Telefonica where there's 180 million consumers, the vast majority of which don't have access to formal financial services, that we're looking to enable in conjunction with those who provide the financial services to get to that. So I think there's a lot of talk, as I said, on people who we've served and served well today and how we help them get new experiences. But I think it's even more inspiring in saying, how do we tailor these products to reach people we haven't been able to get to before? One just quick example, if I could. In South Africa, we worked with the government for the benefit distribution scheme. The government estimates by working with MasterCard and electronic payments, they'll save about $380 million over the next 5 years. 20% of the population of South Africa will now have a MasterCard payment product that they can use to ensure they get the benefits they deserve safely, and then to use it for subsequent electronic transaction. That's a big part of the transformation that convergence is driving that we didn't have the opportunity to talk about today.
Gentleman over here.
Hi there, I'm heartbroken too. When I
Why so much
a great
heartbreak?
discussion,
This was a great panel. Come on.
well, this is the opposite end of the spectrum. When I'm 60, and when I came home from college in the early 70s, and I was excited about Ralph Nader's beginning the consumer movement, my dad said, "I have raised you to be a producer, not a consumer." Now, I'm rich today, but I was poor once, and the way that happened was that I did not have a credit card until I was 29. And when I got it, I could not sleep that night. It's as if I felt like I had heroin in the house. And I've avoided debt my entire life. Now, my question is, we know from studies that all you have to do is put like the MasterCard logo on a screen, and people will pay more money. And then they'll pay more money, they'll make impulse purchases of thousands of dollars. So there's a big advantage in cash, and that is it's inconvenient. And it controls, it helps you know how much money you have. We
So
lived
what's
in
your question,
Japan.
sir?
Yeah.
My question is, where are your ethics and your morality in this thing, right? Where is,
I think I better take
I
this
lived
one.
in Japan when I was in the 1990 when the credit cards were going nuts, signing up.
Sir?
Okay.
We have 1 minute, so if you want
Right.
your answer,
Yeah,
let's hear from Ed.
answer.
Two thoughts on that, which I think is absolutely missed. Most of the transactions we run aren't credit-based, right? If you think about it as a payments system, we're simply connecting consumers to the source of the funds, whether it's the DDA account they have, whether it's all the incredibly innovative work being done with prepaid products, or access to credit, which has huge benefit for consumers when used responsibly. I think the other thing that's important about that, though, is it's enabling those systems to provide people, to your point, to better manage their finances. I think it's ridiculous to think that you manage your finances going to cash. I don't think when General Electric looks to manage their finances better, they don't say, let's drop to cash, right? I think the innovations that we can now have through connectivity and smartphones will make people more savvy consumers, which is what benefits us, which benefits Citi, it benefits everyone on this stage. We have a partner, they had an application, I love it. Your balance was a little fish tank. as you spent your money, the level went down, fish started flopping around, you couldn't believe how compelled you were to deposit more money back into your account. It has nothing to do with credit and everything to do with how we use this technology to make people more savvy about how they manage their finances.
And sadly, the session is over. So I wish we could have taken more questions, but there's always
Thank you.
next year. Thank you.